Get ready for the action because the enterprise tech world is absolutely exploding right now. We start with ServiceNow, where shares jumped 3.7% in the morning session following massive earnings from enterprise leaders. We dive into what this means for the workflow automation giant and why investors are buzzing about this unexpected rally in enterprise software.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we are tracking the incredible progress in AI production with Woolworths IQ. The Woolworths and Quantium joint venture is running an intensive annual boot camp with Google Cloud's Advanced Solutions Lab to push AI and machine learning use cases straight into production. Find out how this collaboration is accelerating real-world deployments. Now, let's talk about the behemoth in the AI space. Alphabet just showed why it belongs at the top of the AI stock conversation, with Google Cloud revenue soaring a jaw-dropping 63% year-over-year. We break down how Google Search is integrating generative AI and what this phenomenal quarter means for Alphabet's future. And finally, we look at Rubrik, which is surging 8.8% after expanding its AI guardrails and Google Cloud SQL protection. Discover how Rubrik's new agent cloud and identity resilience efforts are reshaping its security platform and what this means for the future of AI operations. Stay with us for the full breakdown. Noi Dung Kai Tight. ServiceNow shares experienced a significant surge today, jumping 3.7% in the morning session, following robust earnings reports from major enterprise technology leaders that sparked a broader rally across the enterprise tech sector. The market momentum was fueled by strong performance from competitors, including Atlassian, which soared nearly 30% after reporting 32% revenue growth and accelerated cloud adoption. Additionally, Twilio saw a 20% jump, driven by its fastest growth in 3 years, attributed to surging demand for its AI-integrated voice tools. This positive sentiment was further reinforced by record-breaking cloud strength. While Oz posted 28% growth, Google Cloud stunned Wall Street with a 63% revenue increase, signaling that enterprise AI infrastructure spending is now yielding tangible top-line returns for the software layer. This rally reflects a strategic shift as investors refocus on high-growth software as a service, SaaS, names that had previously lagged the broader market. /N following the initial peak, ServiceNow's shares stabilized to $93.49, marking a 2.6% increase from the previous close. Analysts note that while today's movement indicates the market views the news as significant, it does not fundamentally alter the long-term perception of the business, given the stock's history of volatility, which has seen 14 moves greater than 5% over the past year. And this development follows a previous major movement 10 days prior, when the stock gained 5.5% after rebounding from a steep sell-off following its first quarter earnings report. The prior trading session saw a decline despite ServiceNow beating revenue and earnings estimates and raising its full-year guidance. That initial negative reaction was linked to investor concerns regarding deal timing, specifically a headwind from delayed closings of large Middle East deals due to regional conflict, which management cited as impacting subscription revenue growth. The subsequent recovery suggested some investors deemed the prior session's sharp decline excessive. /N further bolstering market sentiment, German software giant SAP announced better-than-expected first-quarter profits and reaffirmed its long-term cloud strategy. SAP's strong performance helped alleviate investor worries about the impact of artificial intelligence on the wider enterprise software industry. /N despite the positive momentum, ServiceNow remains down 36.6% since the start of the year and is currently trading at $93.49 per share, positioning at 55.3% below its 52-week high of $208.94 recorded in July 2025. For investors who acquired ServiceNow shares 5 years ago at $1,000. The current value reflects a total return to $967.24. Woolworths IQ, the joint venture between Woolworths and Quantium, is accelerating its artificial intelligence and machine learning initiatives by running an annual boot camp in collaboration with Google Cloud's Advanced Solutions Lab. This program is specifically designed to move AI and machine learning use cases from concept to production. The initiative began in 2024 with a 2-week immersive boot camp in California, followed by a second session in Australia involving 25 Woolworths IQ staff. Woolworths IQ has seen significant tangible results from these engagements. General Manager Michelle Baumann highlighted that the initial cohort delivered 5 capstone projects, with 4 of those projects now successfully deployed in production. More recently, the March bootcamp yielded 4 new capstone projects, with 2 slated to move into production this quarter, and the remaining 2 planned for deployment later in the year. The collaboration with Google Cloud's Advanced Solutions Lab, ASL, is structured as a multi-week immersion where Woolworths IQ technical teams work directly alongside Google Cloud AI/ML solution engineers. This partnership focuses on rapidly transforming high-value proofs of concept into operational systems. Baumann emphasized the critical elements for success, including the importance of curating high-quality data, securing business sponsors, and ensuring subject matter experts were available throughout the bootcamp to support project delivery. Industry analysis suggests that utilizing dedicated vendor labs or AppliedML bootcamps significantly shortens the proof of concept to production cycle. These accelerators provide focused engineering time, specialized vendor expertise, and product sponsorship, leading to faster model iteration, earlier identification of data quality issues, and clearer handoffs between research and engineering teams. Practitioners are advised that such accelerators often surface crucial integration work, such as data pipelines, monitoring, and model drift controls, much sooner than in ad hoc pilot programs. Editorial commentary notes that Woolworths IQ's adoption of this repeatable bootcamp model aligns with a wider industry trend where large enterprises partner with cloud provider solution teams to mitigate risks in early-stage AI projects. This underscores the strategic value of pairing business domain sponsors with embedded engineering support to ensure deployment readiness. Alphabet, the parent company of Google, has demonstrated a significant resurgence, positioning itself as a leading artificial intelligence stock with substantial growth potential. The company's performance highlights robust expansion across key divisions, driven heavily by its AI strategy. Google Cloud, a primary engine for Alphabet's AI revenue, reported a remarkable 63% year-over-year revenue increase, reaching $20 billion in the first quarter. This growth is fueled by the adoption of Google Cloud's infrastructure, including custom TPUs, by companies seeking to train and run AI models at a lower cost than traditional GPU-based methods. Simultaneously, the core Google search business remains strong. Despite expectations that generative AI would entirely replace search, Google has successfully integrated generative AI into search overviews, effectively turning each query into an AI prompt. This integration has maintained profitability, with the Google search business posting a 19% year-over-year increase. Cumulatively, Alphabet's overall revenue grew by 22% year-over-year, marking a phenomenal performance for the mature tech leader. Analysts suggest that the significant investment in data center construction is being justified by this growth trajectory. The report asserts that Alphabet is firmly in the conversation for top AI stocks due to its current standing and sustained future growth prospects in the AI sector. While some investors may view the recent stock surge with caution, the analysis suggests that the timing remains opportune for investment, as Alphabet possesses years of further AI-related growth ahead. The report concludes that Alphabet is a solid investment, with continued capital inflow expected to drive further gains. The content also references a separate analysis, identifying 10 other stocks deemed strong buy opportunities for investors at the time of publication. Rubrik shares surged 8.8% following announcements regarding expanded AI guardrails and enhanced Google Cloud SQL protection, prompting questions about the viability of its bullish investment case. Analysts suggest that Rubrik's ability to translate its strong cyber resilience and AI security positioning into durable, high-quality recurring revenue, despite current losses and intense competition, remains the key determinant of its success. The recent announcements, particularly the April 2026 launches focusing on AI agent governance and Google Cloud SQL resilience, reinforce the core narrative. However, the immediate swing factors are seen as execution on newer products, specifically agent cloud and identity resilience, alongside the persistent risk that high spending levels may not translate into profitability. Rubrik Agent Cloud, designed for the Gemini Enterprise Agent Platform, is closely tied to current catalysts as it directly expands Rubrik's role within AI operations. If enterprises scale AI agents, the capacity to govern, monitor, and rewind agent actions could be crucial for diversifying revenue and building a broader security platform. Despite this, the impact of Agent Cloud on growth and margins is currently uncertain, as it remains an early-stage offering. Rubrik projects reaching $2.4 billion in revenue and $267.2 million in earnings by 2029, necessitating a 21.5% annual revenue growth and a significant earnings increase from its current deficit. Prior optimistic forecasts hinged on AI and identity bets, driving 24% annual revenue growth and a swing toward future earnings. The success of the practitioner community and agent cloud initiatives will now be critical in either validating these views or forcing a reassessment of their scalability. Investors are cautioned that newer ventures like agent cloud and identity resilience are still nascent. While the market is reacting positively to the strategic moves, the path to sustained profitability remains a central concern for investors assessing Rubrik's long-term potential.